100%.
Oh, great. Sorry. I'd just like to, first of all, welcome all our attendees to Ventureburn's first series with Kalon Venture Partners. Our new and very exciting webinar series will be focusing on Section 12J. And in our second webinar today, we will be focusing on how investees can benefit from Section 12J, along with really valuable insight into the world of entrepreneurship. Co-hosting our webinar series today is entrepreneur and venture capitalist Clive Butko, with guest speaker, entrepreneur and co-founder of tech startup Mobiz, Greg Chen. Clive has an incredible track record in the industry as former CEO for Accenture South Africa, and then later went on to form Kalon Venture Partners with the purpose on focusing on investing in digital disruptive technologies. As the CEO and co-founder of Mobiz, an innovative tech startup that focuses on mobile digital marketing, Greg has a long history in the South African mobile space and is passionate about the role that technology and entrepreneurship can play in engaging the country's people across the spectrum. So I'm just going to wait about a few minutes for more people to join in, and then we're going to proceed. So just while we're waiting for everyone to join, there's just a few housekeeping rules that I would like to go through with our attendees for today. We really would encourage everyone to please post their questions in the Zoom webinar chat box, because at the end of our session, we're going to have a fire chat question and answer session. And we'll be, as a friendly reminder, we will be recording today's webinar, so it will be available on Ventureburn's website just for you to go and have a look back at it. And yeah, just waiting to see more people joining. So, okay, we're going to dive straight into our exciting and enthralling panel discussion for today. So my question, first, before we dive into everything, I would just like Clive and Greg to just give a brief introduction about themselves.
Thanks, Ishani. I'll kick off. So as you said, I was the ex-CEO of Accenture South Africa, where I left about 9 years ago. And always been an entrepreneur, was involved in building tech businesses all over the globe, including Silicon Valley. And since I formed Kalon Venture Partners, we've invested now in 8 digital disruptive technology companies. In fact, we're finalizing our 8th investment, hopefully today, where the final paperwork will be signed. It's a very exciting time. And yeah, we've got these companies. I sit on the board of all the companies. I'm the chairman of about half of the companies. And very exciting time to be in the venture capital space.
Okay, thank you. Over to you, Greg.
Hi, everyone. Thanks for being here. I'm the CEO and co-founder of Mobiz. I've been in the mobile tech scene for the past 15 years. I was trained as an engineer. I never really worked as an engineer. Always loved the startup scene. Have launched both B2B and B2C products into the space, and now very focused on Mobiz, which is a B2B. Thank you very much.
Great, thank you both for introducing yourself. I just shout out to Louise for joining us today. Thank you so much. So we're just gonna get right into our discussion. And I do encourage all of our attendees to please pop in your questions as we go through, because we may be able to answer them in between our just panel discussion for today. So my first question I would actually like to pose to Clive is, what does it mean for a startup to become an investee of Kalon Venture Partners?
So yeah, so I think, you know, we've got what I call the 5 T's, and we're pretty consistent about this for a startup, or what we typically invest in is scale-ups. So Greg, as an example, he'll talk more about Mobiz, but Mobiz was already generating $1.5 million of revenue when we invested. He's had incredible success subsequent to that since lockdown. We'll talk about, and I don't want to steal his glory, but his 400% or 500% growth he's had in the business since the February-March lockdown. So we typically invest in those type of businesses where we invest in first T, which is the team. We want to invest in a team of people that are not just either an engineer or a hustler or salesperson, but they've got a well-rounded team. So they've got people that can sell the stuff, and they've got people that can build the stuff. And they've got a whole lot of other skills as well. So that was the number 1 thing, is the team. Number 2 thing is the technology. So we are a technology investment company. We don't do CAT scan technology, we do software technology. So we invest in technologies. I have a computer science applied maths background. I headed up Accenture's technology business before I became the CEO, and have, as I say, have been involved in probably building 100 tech businesses. So we look for disruptive technology, and Mobiz is very disruptive. Mobiz is disrupting the marketing tech space. The business we're closing off today is in the automotive space, which is extremely disruptive around using virtual reality and machine learning and artificial intelligence to cut down the many days it takes to get bumps and bruises on your car fixed to a couple of minutes, that you can get the assessor out there, or not even use and need an assessor, and you can make an assessment of what the cost of the car. The third one is traction. We like to invest in companies that's up. We do make exceptions, but we like to invest in companies that have got traction, that the market is, they've got logos, they're selling to good clients. The clients are, the dogs are eating the dog food, as I would say. The clients are, they're solving a big problem for the clients, and that's why the clients are buying their technology. The fourth one is just really just about the target addressable market. We don't want to invest in a company that's investing in a fish in a pond. We want to invest in a company that's investing in the fish in the sea. But we also know we want to start with a niche market, then go to the next market, and then go to a more global market. So a lot of our companies right now, and Greg will talk about his as well, are we looking at globalizing those companies. So from South Africa to the world. And that's the target addressable market that we look at. So it must be a very big target addressable market. And the last one is just around the tenacity of the entrepreneur. We want someone that's absolutely obsessed with their product, they're obsessed with their vision, they're obsessed with building a business, they're obsessed with success. And if we get those 5 T's and we get a tick, we've got a good chance of getting our investing capital, which we obviously are raising now.
That's wonderful. And with that being said, what are the benefits for startups becoming investees in Kalon Venture Partners, aside from capital?
So I think I'd love Greg to answer that question. I've got my view on it, but Greg has been, we invested in Greg about 8 months ago, and I think he's experienced, and obviously he's experienced Kalon and what we do bring to the party.
And the answer is going to be a cheesy one. It's Clive. It's Clive for sure. But the whole of Kalon is really great. It's, you know, when we started chatting to Clive, I think at the end of last year, you know, it was the very first time we raised institutional capital. Our capital advisory stadia was great enough to get hold of Kalon Venture Partners, and we were very clear on one thing, is that as what Clive said, we already had traction. So what we're raising wasn't cash, we're raising for capital. That means we really need a strong partner that can help us grow our business. And was very clear from day one that Clive was an operator that understand how to grow a business, and that several people on his board are growing, if not already exited from really successful businesses. So that was really attractive to us. And having said that, Clive and Kalon exceeded all expectation even after we became an investee company. So yeah, that's basically you know, what I have to say.
Thank you so much for saying that.
And I didn't pay Greg to say that.
Thanks so much for sharing that.
Oh, you did. I'm good.
And just in addition to what you said, Greg, obviously becoming an investee of Kalon Venture Partners, and what Clive had touched on a bit earlier on in terms of your business expanding, would you be able just to elaborate and just share a bit more with our attendees on how being an investee has enabled you to upscale, and also what kind of achievements has it yielded for Mobiz?
Yeah, absolutely. I think beyond the resources that Kalon could provide, I think what's also crucially important is the confidence to scale. Having a partner on a strong voice on your board, giving you can bounce ideas off on a daily basis. Me and Clive, we probably speak on a daily basis, sometimes a couple of times a day. Just an idea on how to scale and how to budget and where to look out for, and where to say, hey, we shouldn't overscale here, we should scale more here, how to get traction, and even down to people problems, right? Or well, not people problems, people opportunities. And so any and the nuances of growing a business is where I think Clive and Kalon really understand, especially in tech businesses. So having said all of that, it really helped us to scale in the past 6 months. During COVID, we were fortunate enough to be one of the beneficiaries, because we are in a customer engagement business, and as what Clive alluded to, we grew 4x, not just in terms of revenue, but also in terms of people, and both is where we're really fortunate to have Clive and Kalon on our side. Otherwise, it would have been much messier.
That's wonderful to hear. We just have a question from Guy Harris, and he would like to know, what are the red lights, and I think this is actually for Clive, besides the 5 T's that he mentioned earlier, and what are the amber lights from scaling? He's from a scaling medium enterprises in Cape Town.
Yeah, I think the amber lights are, when there's maybe a little bit of miscommunication between yourself and the entrepreneur before you make the investment. You're not sure. I mean, integrity is everything for us, and we trust the entrepreneurs are going to be open, and they're going to, let us know the good, the bad, and the ugly. So those are yellow to red flags, but I think the red flags are the more important ones. I think number one is you have to have the right team and a culture. So team, they have to have the right culture, a culture of winning, a culture of taking risk, a culture of being prepared to go out there and do everything that is of the highest quality to the customers. And then finance, one of the biggest red flags to me is when the entrepreneur doesn't understand their cost of customer acquisition, some of the financial KPIs that you absolutely have to know as an entrepreneur. What's your cost of acquisition? What's your lifetime value? What's your net economic churn? What's your negative economic churn? What's your positive economic churn? And understand how these levers are pulled against your business. And the next one is your go-to-market strategy. We want to understand that you have a clear-cut go-to-market strategy. Are you doing it through channel partners? Are you doing it through sales-led, so direct sales, or product-led, which is rather through the internet where you make your sales? So we need to understand that you've got a clear-cut product. But I must say the biggest red flag for me is about relationships. You can fix your product, you can fix your team, you can fix the financials, you can fix the go-to-market strategy, but if you've got the wrong investor and there's no culture fit between the investee and the investor, that's a problem, which is very, very hard to fix. And some of the horror stories I've seen in my career where, I've been on both sides of the fence, raising capital and deploying capital. The horror stories I've seen is when you've got investors that are not aligned with the entrepreneurs. It ends badly, and it's very, very hard to fix. So the biggest red flag for me is, can the investor and the investing companies work together? Because it's like a marriage. We're talking about 7 years, 8 years that we're going to be together until we exit the business. When I spent time in Silicon Valley, I remember they told me the average marriage in America was 5.5 or 6.5 years, and the average time you spend with your capitalist is longer than that. So you really have to trust each other and get on with each other. So great question, and hopefully I've answered.
Yeah, Greg, would you like to add anything to that? Seeing as you're an investee with Kalon Venture Partners, I also just wanted to touch base on what led to you guys becoming an investee with them, and why did you opt for Kalon?
It's as what Clive said, it's a marriage. So it's a long-term partnership, and so when you're raising, you're not really, as I mentioned, you're not looking at the money, you're looking at the partner, and so that dynamic needs to run its course, which means you can't look at short-term gains. You need to look at a partner that you're willing to go on a long road. And Kalon has definitely been one of those. On the process of kind of evaluating Kalon, why they're the right partners. I've had the pleasure of talking to several of his invested companies before we signed the dotted line, and all of them said how committed Clive is, how hands-on he is in introducing, in generating revenue for these businesses, finding opportunities. And what I found out, from firsthand experience is that, being able to support those opportunities is just as important. So guidance on culture, people, team is what Kalon's really good at as well.
That's wonderful to hear. We have another question from Louise Mitchell, and she would like to know which roles should be classified as part-time and which full-time with a very early stage business. I think that could.
Let me give my answer, then Greg can give the actual what he's done in Mobiz. But I mean, if you're in a technology business, you've got to have someone that can build the stuff, and you've got to have someone that can sell the stuff. So you need the software engineer, you need those real top engineers that can build the most unbelievably disruptive tech. But at the same time, you can have the best tech in the world, but if you can't sell it, you don't have a business. So sales and engineering are the two absolute. Product development, software development, and sales and marketing, but particularly sales is key. You can have a part-time CFO, you can have a part-time marketing, you can have a part-time everything else, but not part-time sales, not part-time product development, and not part-time software engineering. You absolutely have to have those roles full-time. And as you grow, and Greg will talk about his, I think 8 or 9 people he had before he invested to close to 30 now, how he's actually plugged all those gaps, and actually now even has his own legal counsel, which has made a huge difference to Mobiz. And I'll hand it over to you, Greg.
Yeah, 100%. I think to me, what's more important than full-time or part-time from a remuneration perspective is commitment. So I think at the early stages, I think product definitely full-time, as what Clive is, sales definitely full-time, but perhaps if you can find a way to find full-time commitment with a scalable remuneration for doesn't eat up into your fixed expense, but taking things on a performance base, that's really great. Product wise, it's going to be a lot more difficult. I think it's important to have a strong product, full-time focus on client success, always talking to customers. At the beginning, that person should be the entrepreneur, because the entrepreneur should be the one that talks to the customers and understand the customer's pain point and needs. And then, as what Clive said, as you scale, that culture of customer first needs to be passed on to your team. And of course, it's easier said than done. But that's what I aspire to grow as part of our team.
I think just to add to that, Shani, it's quite interesting, because my advice to any entrepreneur that might be on the webinar today is a lot of people bring in full-time salespeople too quickly. And the best salespeople are going to be the founders. There's no question. That sales founder, take Greg as an example, he's going to be the best salesperson. You cannot outsource sales before you've got product market fit and you know exactly who the persona is of the person that you're buying, what's the use case, what problem are you solving. So once you've got that and you found a repeatable and scalable sales model, you can then start hiring salespeople that can actually just replicate the playbook that you've already created. I'm finding many businesses now that think they will solve everything by bringing on salespeople too early, and they just fail. Because the founder hasn't found this, what we call product market fit. They're not actually sure of how to set it themselves. They don't know what their value proposition is, and they're going to hire salespeople to think they can solve that problem. And it's just it's a total disaster and a waste of money.
Yeah, of course, it's like a domino effect, essentially. If the entrepreneur themselves doesn't understand the foundation of their product or how they would like to kind of get it across, I can completely understand that. Just to maybe elaborate a bit more on entrepreneurship, I just wanted to ask Greg if he could provide any tips of advice to any budding tech entrepreneurs that have joined today's webinar, just on entrepreneurship and how they should go about pursuing their dreams.
Okay, so I'll share what limited I've learned, and of course looking forward to learning a lot more. But just following what Clive has said, and you'll see this is a pattern. I like to follow what Clive has said because he's like our leading mentor right now and going forward. But I think the most clear thing is to identify the problem you're solving. And this is why an entrepreneur at the early stage is the best salesperson, because they're the ones solving a problem. And if you can convey what problem you're solving to your customers, who else can? So identify the problem that you're solving. I know it seems obvious, but as a core being entrepreneur is that sometimes you think you're creating something cool, but you're not solving any problem. And I think you need to identify what problem you're solving. And then secondly, just as important is that you need to align that the monetization of the solution that you're providing towards the return on investment for businesses. So you need to find a way to find a way to say, hey, this is the value that I provide, but I'm not charging you too much for it, just enough, right? And I think that's really important. So again, I think that's what Clive mentioned in saying you need to have a go-to-market fit, and that's exactly it. And then thirdly is just the solution that you're providing needs to be scalable, and that differentiates a lifestyle business versus a startup, because you can scale and you can become a big business. So I think those are the three key things that I think is important for an entrepreneur to consider from day one.
But I think, Johnny, just to add to that, and I think Greg is a very humble guy, but one of the other things the entrepreneur needs to understand is raising capital. If you are in a startup, and particularly if you're in a blitzkrieg type of startup, which is what Greg has got, his numbers have gone completely out off the ballpark. I mean, he's growing so fast. So, from $1 million annual run rate to $5 million annual run rate in 8-9 months. I mean, it's just, you don't see this very often. We've got some very high growth companies, but Greg is unbelievable how he's shooting the lights out. But Greg has also been part of an accelerator in the US, which I would absolutely recommend to most tech entrepreneurs. That you can get yourself into an accelerator, because it's helped him with networks and link and connections in the US. And now Greg's raising a multi-million-dollar round in the USA through our contacts to Kalon and his contacts. So that's critical. We want to expand the business to the US. We want to go in the US big, and we need to raise a big round of capital. And Greg's having some very nice conversations now about raising a multi-million-dollar round of capital in the US. Yeah, that third point I mentioned, that considering that your business needs to be able to scale, it's no good if you can't get the capital to scale. Right. And the key with the startup is you might be able to organically scale a little bit, but we have a limited lifetime. we humans, we live for 60, 70 years if we're lucky, right? So you need to get to there as soon as possible. And that's where venture capital really is the accelerant. And as what Clive said, we were very fortunate to be part of the Alchemist Accelerator, which is the world's leading B2B accelerator. Based out of Silicon Valley, and their connections, along with connections, really helped us get in touch with not just investors but advisors and customers. So those are the important aspects of scaling a business, especially when you're going abroad. So yeah, a lot of exciting things and scary things ahead.
Yeah. Thank you so much for sharing that with us, Greg. We just have an outpouring of questions coming in, so I'm actually just going to move on to our fire chat question session. So I think the first question is for Clive, and it comes from one of our attendees. It says, does Kalon invest in the space of both software and hardware, or software exclusively?
Yeah, we have looked at hardware businesses, so all our investments to date are software. But we won't invest in an exclusively only hardware business. So if we look at the Internet of Things, it might have a little piece of hardware with software in the fourth industrial revolution. We would definitely look at that. But real hardware businesses, I've been there, done it in the early 2000s before the cloud, when people were investing in big hardware investments. It's very, very capital intensive, and that's the problem with it really impacts your working capital. You need a lot of cash. So it's very capital. It's not capital light, which we like from our software businesses. So only piece of hardware we wouldn't invest in, but a piece of hardware that solves a big problem, particularly a little piece of hardware like in the IoT, where the hardware maybe is a self-regulating geyser and it can prevent the problem before it happens. I mean, that we would definitely look at that piece of hardware, but it must be coupled with some really neat disruptive software, and then we would seriously look at making an investment.
Okay, great. So just that kind of elaborates on another question that we got in, which says, at what stage of business does Kalon invest, with or without revenue?
So we invest in growth capital. So as Greg was saying, Greg was doing over $1 million, $1.5 million at the time we invested in them. So most of our capital, we've got what we call a portfolio theory. So we probably invest 10% of our capital in early stage businesses. So they've got one or two clients or only one client. So they're very early stage, and it's more an angel investment than a venture capital investment. We invest about 10% in later stages. So they're more private equity, but 80% is in more the growth capital. So they found product market fit. They've got a repeatable and scalable business model, and all they need is either money for scale geographically, either money to scale the different products. So we look at what they're going to scale, and typically we would look at the capital going into scaling to South Africa or scaling globally, or becoming a dominant global product. So we do early stage stuff. We've made our early stage investments, but if anyone's looking for Kalon now, it's more you've got some clients, you've got some logos, you clearly the dogs are eating the dog food, you're showing double-digit growth every single month. It's critical to us that you're showing double-digit revenue growth. We're not worried too much about your EBITDA and your net profit operating margin. We're worried about we're concerned about your revenue growth. So if that's double-digit and you really are coming off a reasonable base, please don't hesitate to contact us. We're then definitely interested in having a conversation.
Okay, great. And we have another question, which I think could be either posed to Clive or Greg. But what are your thoughts on the African VC scene? And do you think that you're missing out on opportunities outside of South Africa?
Well, I'll tell you, Master, I think there's no doubt. If you look at the VCC, so venture capital companies, which is the Section 12J, which we are, it's a Section 12J company, which was promulgated by National Treasury, which is a big tax incentive. So any investors, particularly on this call, can get 100% deduction on the investment they make into Kalon. And there's a sunset clause which ends June next year. So if anyone does want to invest, they need to invest before the February tax year end, and they can then get the 100% deduction. But I think, in all honesty, we are limited to South African companies when we make the investment. Once we've made the investment, the companies can then go offshore. That's not the problem, but we wouldn't be able to invest further capital into those companies. We definitely would like to be able to go to Africa, because the problem with South Africa, there's not enough capital to really take advantage of the big Series A, the $2 to $5 million checks, or Series B that's being raised in parts of West Africa, parts of East Africa. So we would at some time look at a fund that would go into, which wouldn't be a Section 12J fund with the limitations that it's got. And we would look at a fund that we can go into Africa or go anywhere in the world. But we believe Africa is a very ripe market for venture capital. There's some fantastic entrepreneurs, and people don't realize, and I see them all the time, coming out of Kenya, coming out of Nigeria, coming out of other parts of West Africa, solving huge problems in Africa. So we would definitely be looking at raising another fund once we've deployed our capital and we really got started getting a couple of exits in our current companies of starting an African fund.
Great. And would you like to maybe provide some thoughts on that, Greg, in terms of from a startup and entrepreneur perspective?
Yeah, I think it's easy to look across the pond or look into Silicon Valley and think that, hey, you know what, they've got so much more capital, it's so much easier to raise capital there. But I think that notion slightly warped. I've come from both, from both, and I'm currently raising, in the Valley and in Bay Area, and so what I can say is that if you are a South African company, you need to show local product market fits, and that's not enough. You need to have validation from local investors. If you don't have those elements, you try and raise over there, they're going to ask you big questions. Things like, can you sell here? How's your product? Is it going to fit here? Is it why have no one backed you in your home country? Right. So I think it's tremendously important to be able to raise in South Africa based on a South African ecosystem, and then take your either your extended C or Series A or Series B, overseas, whether this is in the Bay Area or in Europe or wherever else. Clive, I don't know if you resonate with that or if you need anything to
Yeah, no, I think that's right. My advice to anyone is, I always say to everyone, build your business where you birth it. So if you birth it in South Africa, build it first in South Africa, because South Africa is a fantastic market to prove product market fit, prove that you can get logos, prove that you can start getting that growth. It's a phenomenal market. It's not big enough to create $1 billion company like a unicorn, but it's great to get your technology solving a big problem. And once you've got that, as Greg says, Then you can decide if you're raising capital in the US, go and take your business and scale it in the US. If you're raising in Europe, go and do it in Europe. If you're raising in Asia, go and grow the business in Asia. So in Mobiz's case, we know there's a big market in the US, and that's why Greg and I have decided that it makes sense to raise in the US. But some other businesses we might raise in different territories or geographies, just because there's better opportunities for that business in that market.
Okay, great. And then another question that's come in is, when is the best time to raise capital, for example, for Mobiz and just in general?
Do you want to answer that, Greg? I mean, I've got an answer.
I think it's when you know you need the money to scale, right? So you need to make sure that what you're solving is relevant. So you've had customers tell you that, hey, you know what, this really has value to me. I understand where that value is. It could be return on investment, it could be increased sales, it could be increased customer engagement, it could be just making people happy in the business, whatever it is. You need to find that solution, and then once you have a product that can be scaled, that's when you need the capital. And that's from my experience. And so it's good to be, especially in South Africa, it's good to be super capital efficient until you can get to that point. And I think many company has done that, so it's not impossible. But yeah, I think that would be from me personally. I'll let Clive will be much more qualified.
I think just to answer the question in a slightly different way, I'll add to it. I mean, there's four. The first, if you're raising capital, we're talking about for a startup now, scalable startup. We're not talking about for an SME. We're talking about for a scalable startup. So there's 4 stages of capital. There's the seed investment. So you get someone that's normally your family, fools and friends, they call it. That's the family, fools and friends, the 3 Fs round, where you have to raise an initial capital just to get your idea and build your first minimal viable product. So that's typically your seed stage. Then you get the angel investor. This is before Kalon or any of the other VCs get involved. You get your angel investors, they're high network individuals, they love to be involved, they want to help you, they want to mentor you. And that's the next round of capitals. That's when you've got a product, now you want to start going to market. That's the angel investors. And there are lots of them. There's not enough of them in South Africa, but there are angel investors in this country. And you have to actually go and find them, I think, in the industry that you're trying to scale, and you can actually raise the capital. Once you've got, as Greg says, you've got the product market fit, and once you're scaling already and you need more capital to scale, that's the time to knock on Clive's door and knock on all the other VCs that are in South Africa. And there's not that many tech VCs, but the few tech VCs there are, that's the time to knock on their door. And the next form of financing is private equity. That's when you've really got a big business and now you want to take it to another level or pass the ownership over to someone else. And lastly is mezzanine financing, is where pre-IPO, you're going to take out debt before you go and IPO. But what I really liked about Greg and a number of other businesses we invested in is businesses that don't raise capital, that get to $1.5 million without raising capital. So they're frugal, they're making money, they're actually making an EBITDA, they're making profit. And that's an exceptional achievement in any market with a tech business, that you can actually get your customers to fund it. So if you've really got a software that solves a big problem, get your customers to pay for it. Get your customers to fund it. And why is it so important for customers to fund it rather than Clive to fund it? Is because I'm going to take equity from your business. I'm going to dilute you. If you get your customers to fund you because you're solving a big customer problem and they put a bit of capital in or they prepay for your technology, it's non-dilutive. It doesn't dilute your equity. You can rather get that dilution later or actually never get the dilution. Rather just bootstrap the business, keep on getting customers and keep on scaling businesses. And there's many businesses around the world, even that have come unicorns, that have never raised capital. And I'll tell you, I'll take my hat off to them. So raising capital doesn't validate what you do. It doesn't validate your business model. The only thing that validates your business model is customers, or paying customers. So if you can get paying customers, for one, if you come to me once you've got paying customers, your valuation is going to be, instead of 5 million rand, it's going to be 50 million rand or 100 million rand. So that it just makes sense to rather bootstrap as long as you can. Typically in software business, you can do that because they're capital efficient and capital light. Hardware business is very hard because it does require working capital. If you're going to solve cancer, you're going to have to go and raise a lot of capital. If you're going to, invent the next CAT scan thing, you're going to have to go and raise a lot of capital. There's just no way around it.
I know that you touched on the sunset clause a bit earlier in our fire chat session, Clive, but a question has come in that says, can Kalon invest throughout Africa, and can you comment on Section 12 days sunset clause? I know that you've said
very simple. We can't invest across Africa, unfortunately. So we have to invest in South African domiciled companies that when we make the investment, they can then domicile elsewhere. But when we make the investment, they've got to be South African domiciled companies. The second question is, so in 2009, Section 12Js were promulgated by National Treasury. That was really to help stimulate economic growth and stimulate startups to become great gazelles and really create lots of jobs. It was all about job creation. They had a 12-year sunset clause, which expires in June 2021, so next year in June. And we don't know yet from National Treasury. They've gone on a big survey now to all of us to ask us, how many jobs we've created, what impact we've had, and we've submitted that back to National Treasury. We're holding thumbs that they are going to extend it beyond June 2021, but we don't know that yet. But for investors now and for entrepreneurs, it doesn't make a difference. So if you invest in February next year, so it's just because if SARS doesn't continue at 12J, it just means you can't make further investments into and get the tax deduction. You can still make further investments. We'll still continue going for the next 5 to 10 years, ever long it takes. That doesn't change anything. So investing companies doesn't change anything. It just means we can't raise more Section 12J venture capital to deploy into South African companies. But we can go and raise capital from anyone who wants to put capital into us. They just wouldn't get the tax deduction. But otherwise, absolutely nothing changes. And a lot of people are very nervous that it's all going to change and nothing's going to change. So I want to just put everyone's minds at rest that you do come along with Kalon or any of the other VCs in February, and that's sort of the last time to invest before June, because you get the tax deduction. It makes absolutely no difference to if they extend or they don't extend. We hope they do extend because already 9.3 billion rand has gone into Section 12J. I think something like 12,500 jobs have been created. And if you look at the average cost per job, from a survey that I've read, the average cost per job created by Section 12J is an order of magnitude smaller than an average job created by the government. So there's a lot of incentive for the Section 12J to continue, but it's out of our hands. It's in the hands of National Treasury.
I know both of you touched on earlier about the relationship between investing in a venture capital company and actually, discussing that it is a marriage. And one of our attendees, Roy, sent in a question that he would like to know: when does the fund decide to recoup your investment in a company? And you, because as Clive had mentioned earlier, it's over like maybe 7 years, 5-7 years. So he would just like to know, when does a fund decide to recoup your investment in a company?
So I'll just talk quickly from a venture capital point of view. We look at companies that if we make at least us a 10x investment, return on our investment. So we know we're not going to get 10x on every investment, but we think Greg is definitely a 10x type or 100x, whatever it might be, exit we can get. So we would, with a very high growth company like Mobiz as an example, we would want to at least, if we exit in 5 years, we can exit for 10x. So we put in 50 million bucks into Mobiz. We want to make sure that 50 million is at a minimum 150 million, and hopefully it's a lot more. So we look at the portfolio as a we don't take one company and decide when we want to exit. We look at the portfolio and say we want to make new investments. We need to also disinvest and get out of some companies because we also don't have the resources to have 40 companies. We just don't have the people. So at some point we would discuss with the entrepreneur when it makes sense for the entrepreneur for us to exit, or potentially the whole company exits. So there could be a buyout of the whole company where we exit, the entrepreneur exits, they make a lot of money, we get a 10, 20, 30 times return on our capital. Maybe Greg, your thoughts on your exit.
Yeah, so I need to perform on my end and to get that going. It basically, from an entrepreneur's perspective, you want to try and utilize the capital and find new market and find your product so that you can grow at 3x every 18 months. So the first 18 month 3x, and then the following 18 month 2x, and that's a global standard. I mean, it's what Clive has mentioned, and also in the US as well. So just bear that in mind when you think about what I'm going to achieve with the capital that I raise. Of course, we try our best, and sometimes we don't hit those targets. But I think if you have the right partner on board and know the cyclical nature of any businesses in there to support you, no matter what.
Okay, great. And we have a really good question in for Greg. One of our attendees would like to know, at what point did you decide to launch your product into, or do you actually decide to launch your product into an overseas market?
I think it's a really good question. So one thing is that you have to be confident that your problem, the problem that you're solving in your home country is not agnostic, or it's not defined in your home country only, right? And then you have to do quite a bit of research. Now, to me, there is two phases. It's not just about, hey, I'm going to launch, but also about discovering the markets. And we are still very much in that. We have a conviction that it will be a really great product and we get traction in the US, but to get there, you also need to understand the market. And I can tell you that every single market is very, very different. It could look very green on the outside, but when you get in, there's nuances to why it's green. So I think every entrepreneur needs to plan that research phase, or and Clive mentioned before, is that a bit of a product-led approach to understanding the market. Talk to potential customers, talk to investors is a very good way of getting that understanding. But there's no better way than talking to potential customers, and I don't mean one or two, I mean 50 to 100 of them before you even think about how to initiate that go-to-market strategy. So I would say that I'm 99%. I have 99% conviction that the US market is good and ready. But we as a company need to get there, and for us to get in there, we need to understand how to go to market and how to prime our product to to get there. One simple example would be compliance and legal, and that's the biggest hurdle that we experience right now. Is that for example, US is a very litigious country, so their laws and our laws are quite similar around customer engagement, but the way a business perceive that and operate using a customer engagement tool like ours could be very, very different, because they need the features baked in and they understand how it works from day one, right? So for them to feel confident using a product. So that's just a little bit of example in saying that it's not a simple yes or no question. It's a simple understanding the market, and to understand the market, you need to talk to a lot of people, and the most important ones are potential customers.
Oh, that's great. Thank you so much. And another one of our attendees would actually know from Clive, would Kalon invest in a Stockville app?
I'm sorry, just repeat the question.
Would Kalon Venture Partners invest in a Stockville app?
So we invest in, if it's technology based and it's disrupting the agricultural sector or disrupting the Stockville sector, absolutely, we would look at it. But again, we would look at it once it's got traction and once it's growing a double digit every single month. I mean, Greg just mentioned the 3x growth in 18 months. That's typically what you want to see. So if you're running at 5 million, you want to do 15 million in 18 months, then 45 million in 18 months. And then, you can do the maths. But that's the type of growth. So absolutely, we invest as long as it's digital disruptive software technology. And Stockville is a huge, I mean, there's a lot of Stockville people developing Stockville apps out there in the marketplace. I've seen a number of them already. We didn't invest in them because they were too early, or something wasn't right, or something wasn't quite right. But no question about it. If it's technology and it's disrupting something, and Stockvilles are huge in definitely South Africa, but in Africa as well.
Oh, that's great. Thank you so much. And I just wanted to ask, just in closing our session today, just if Greg or Clive wanted to offer any more tips or points and kind of closing on today's session.
Why not let Greg go first? He's the man of the moment.
Yes.
Thank you, Clive. He's always very generous with his compliments. But I think a lot of questions have been asked about, hey, are you ready to get venture capital? And I think it's okay to get a no. And I think even if you're not sure whether you're ready or not, it's always good to talk to venture capitalists. And even if you think you're not ready, talk to as many as you can, so you know how to get ready. I think that's quite important. You never know if you're ready or not until you start engaging with VCs, and in that interim, I mean, if you could engage with, for example, like Kalon Venture Partner, Clive will give you a lot of guidance on how to get there, and that will help you grow a business already without being even part of the investing company. So it's a bit of an investor hack from my end.
So I think, I just think what I like entrepreneurs to take out of this thing, irrespective of whether you're a startup and you've just started out or you're already starting to scale, it's all about people. It's all about people. When you scale a business, if you look at the Rockefeller habits, and I learned that through my Accenture career and been building these businesses, there's 4 things you build to scale a business. Number one, if you haven't got the right team, you cannot scale a business. You first scale team, you then scale strategy, you then scale execution, and lastly, you scale cash. But if team, there's no I in team. You've got to understand. So single founders, I think they can work. We have invested in a single founder, but typically we like to invest in more than one founder, because it's really hard as a single founder to build a whole business. And I've heard reasons. I say, well, why don't you get someone that can be your software engineer to, no, I don't want to give my equity away. But, there's a book written by a Harvard professor, Noam Wasserman, and he's actually done some research on businesses that actually make the most money. Do they want to be kings or do they want to be rich? So they want to be in control and they never want to give their equity away, or they want to be rich and they give equity away and they bring the right teams. And 95% of the time, the people that had an abundant mentality and gave away control, didn't worry about control and gave away equity to bring the best teams, made significantly 10, 20, 100x more money than the people that wanted to stay in control. So read that book. It's called The Entrepreneur's Dilemma. It'll help you really understand why you need to build a team opposed to I. I just does not work. Honestly, it's too complicated today. To build a startup that you want to scale and get to a billion rand or maybe get to $1 billion, you need a team. It's like going into a fight with Muhammad Ali with one hand tied behind your back. And I'll tell you, I'm a boxer and I'll tell you something, I know I'm going to get beaten up. Okay, let's not talk Muhammad Ali, but I'll get beaten up with one hand behind my back. So build your team, build your team, build your team. That's the 3 lessons I'd say to anyone. And they might say, but I can't afford it. And I've heard that before. And I'll say, you have. You've got something that you've got equity. And equity is gold. So give away some equity to bring in the best team. And maybe you can't pay them a big salary, but they will understand that. They'll know you don't have money yet. But if they just want to be part of the vision and sell them your vision, that's where you've got to be a salesperson. To sell them your vision, give them X% of equity to come into your business, either as a co-founder or as the lawyer or as the product development person. And you can build an unbelievable team before you even start taking your product to market. So there's lots of ways you can bootstrap your business without actually having to raise capital. So don't think raising capital is the only way you can be successful. It's not. As I said, don't get obsessed about raising capital. Get obsessed about solving problems for clients. And then the capital will follow.
Thank you both so much. Ventureburn would just really love to thank both our co-host Clive and our special guest Greg for offering such valuable insight into tech startups and also entrepreneurship. And we would also really like to thank our loyal audience and attendees for making today's webinar. We really hope to see you at our next one, and we will be continuing our series. And I'd just like to reiterate that Ventureburn is very committed to supporting the South African landscape of innovative and boundary-breaking tech startups. And if you have any questions from today's webinar that you would still like to submit, please do send them to info@memeburn.com and we'll be sure to respond and answer. And to also find out when our next webinar is, please do follow Ventureburn on Facebook and Twitter and LinkedIn. And again, as a friendly reminder, we have recorded today's session, so it will be up later today on our page. But I just really want to thank Greg for offering such insightful information into his startup, and Clive for everything that he shared with us today. So thank you both so much, and I really appreciate everyone attending.
Yeah, thank you, Shani. We really appreciate having this opportunity.
Thank you very much.
Thanks. Bye-bye, everyone.
Cheerio.
Cheers.